Alright, today we're going to talk about the underlying markets, the tick values, and we're going to go into the trading hours and contract specs for each of the Nadex contracts.
For example, the US 500, its underlying market is the S&P 500 E-mini futures, which symbol is ES. It's really important to understand that it is not the SPX index or the SPDR's ETF. Also know that these indexes and these ETFs, they're only open during cash market hours. Well, trading the Nadex spreads, you can trade them in the evening, you can trade them, at night when you get home, you can trade them really late in the night, you can trade them early in the morning before the cash market opens. And so there won't even be a chart. And you need to be able to look at the right chart of the underlying market when you're choosing what decisions you want to make for trading. And when you're looking at futures, they have a month that goes with them. And so you need to pick the right instrument, such as ES, when you're looking at the US 500, and the right month for the futures contract. And Nadex makes it really easy to find the right month. Right in the platform, on the tickets, everywhere, you're going to see the month listed right here. So it's going to say like US 500 September 1335 to 1365, and it'll say expires at 4:15 p.m. Eastern time. Okay, so all the quotes on Nadex are Eastern time. Well, September. So if we go over here in this simple chart right here, what it does, it shows you here are the symbols and here are the months for futures contracts. Okay, and then the S&P actually tracks March, June, September, and December. Those are the 4 contract months that the S&P futures trade. So they're actually trading all year round, but in March they'll actually roll over to June, and June they'll roll to September, and in September they'll roll over to December. The nice thing is you don't have to be a master at this. Again, they tell you the month right here on the chart. Okay? So let's say you're looking at a chart of the S&P 500 E-mini futures. Then what you can notice is right here you want to make sure you have the right month. And in this chart on this platform, what you can see is ES0912, so September 2012, and that matches the month. And so you want to make sure you're always matching the correct month. And again, they always have the month in the platform, so it makes it real easy. Now, some futures platforms, instead of putting like 912, will actually put the contract months symbol. So if you look at this platform right here, then what you'll notice is that it actually has ESU2. So ES is the symbol, and then U is the symbol for September, and then 2. So if you have questions about this, just let us know. But again, that's ESU2 would be the example for the S&P 500 E-mini futures September contract. On Nadex, there's a lot of different markets that you can trade. You can trade stock index futures on domestic and international indexes. You can trade commodity futures, and you can trade spot forex. And as I just mentioned, it's really important that you know what the underlying markets are. So on the stock index futures for the United States, the Wall Street 30 is based on the CBOT E-mini Dow futures, which symbol is YM. The US 500 is based on the CME E-mini S&P 500 index futures, which symbol is ES. The US Tech 100 is based on the CME E-mini NASDAQ 100 index futures, which symbol is NQ. And the US Small Cap 2000 is based on ICE's Mini Russell 2000 index futures, which symbol is TF. For the European futures, the FTSE 100 is based on the Life FTSE 100 index futures, which symbol is Z. And for the Germany 30 spread, that's based on the Eurex DAX index futures, which symbol is FDAX. In addition, you can trade the Asian index market of the Japan 225 based on the SGX Nikkei 225 index futures, which symbol is NK. An important point here, this is the SGX Nikkei 225. It is not the CME Nikkei 225. So you want to make sure that you're looking at the SGX Nikkei 225 index futures chart. On Nadex, you also have access to trade commodity underlying markets such as energies, metals, and agriculturals. So you can go in and you can trade the energy such as crude oil, and there's different kinds of crude oil. So make sure that you're looking at the NYMEX crude oil futures contract chart, which symbol is CL. Also, you can look at natural gas, which is based on the NYMEX natural gas futures, which symbol is NG. And then there's the metals with gold, silver, and copper. And all those are based on the COMEX and NYMEX futures contracts, which for gold, the symbol is GC, for silver, the symbol is SI, and for copper, the symbol is HG. In agriculturals, you can trade corn and soybeans. On corn, it's based on the CBOT corn futures, which symbol is ZC, and on soybeans, it's based on the CBOT soybean futures, which symbol is ZS. In addition, with Nadex, you have access to trade Forex markets. So you can actually trade the Forex markets like Aussie dollar, Euro yen, pound dollar, US Canadian, US franc, and US yen. What's really important to understand is that they track the spot Forex market. They don't track the futures Forex market. To illustrate what I mean, here's a chart of the spot Forex euro dollar. Here is a chart of the futures forex euro dollar. Okay? And then here's a chart of the difference between the two. And as you can notice, they're about 10 ticks or pips off. So right now, this one's quoting at 1.2510. This is quoting at 1.2522. Now, this difference should remain relatively consistent, but it is just important to understand that the market that they're tracking is the spot forex market. One of the questions I often get asked is what drives the spread's price? What makes it move up and down? Is it people buying and selling the spread that makes it move up and down? Well, that's how it works in an underlying market, such as the futures or a stock or forex, things like that. But in a spread, it's a derivative. So it's actually driven by the underlying market's movement. So if the underlying market moves up, it will move up. If the underlying market moves down, it will move down. It's not simply driven by supply and demand of the spread, as the market maker and the other traders are making the market based on the underlying price. Again, based on the underlying price. So if the price of the underlying market, such as the euro dollar, moves up, then the spread's price is going to move up as well. So now let's talk about how the spread price actually moves. It's really nice because when you look at other markets, you have to understand that a lot of times the math can be complex, but with Nadex, the math is really, really simple. A tick is the smallest increment something moves in. For instance, on a US stock, we call a tick a penny or a cent. So a stock ticks in 0.01 cents, right? So the smallest move a stock can make is 1 cent. Therefore, 1 cent is a tick because that's the smallest move it can make. If you own 100 shares and a stock moves up 1 cent, then that move is worth $1. 1 cent times 100 shares. On Forex, the smallest increment is referred to as a pip, and on futures, this is referred to as a tick. When trading futures and Forex, this can really get confusing because the tick value or the pip value can actually be different on different instruments. So some of them can tick in quarters, some can tick in, eighth of a cent. Some of them have tick values of $12.50, some have tick values of $5, some have tick values of $10. And again, it can be really, really confusing. Again, Nadex makes ticks easy. The way the price is quoted lets you know what the tick size is, as the last increment is always the tick. Tick size spread's price can be quoted with a decimal place of either just 1, 0.1, 0.01, 0.001, or 0.0001. So let me go ahead and explain that further. Understanding that the tick size is the smallest move, so the price movement will be in 1 tick increments. So if the tick size price is quoted like in 1, then the price will be from 901 to 902 to 903 to 904. If it's quoted in 0.1, it'll go from 900.1 to 900.2 to 900.3. If it's quoted at 0.01, it'll be 90.01 or 90.02 or 90.03. If it has 0.001, then the price may change from 1.901 to 1.902 to 1.903. And if it's 0.0001, like you'll see in a lot of Forex pairs, then it'll go from 1.9001 to 1.9002 to 1.9003. So however the price is quoted, the tick is always worth $1. And this is on every single spread on Nadex. So with a spread that's quoted such as 901, if it moves from 901 to 902, that's a 1 tick move, which would be worth $1. Or if it's 0.1, 900.1 to 900.2 would be a 1 tick move, $1. 90.01 to 90.02, that'd be a $1 move, a 1 tick move. 1.901 to 1.902, again, that'd be a 1 tick move or $1, or 1.9001 to 1.9002, again, that'd be $1. Now let's actually take a look at an example so you can see how easy this really is. And this is actually looking at a screenshot capture here from the Nadex platform. And one thing you'll notice is see how it says 12,600 to 13,000? There's no decimal points. So the last place right there would be a 1, not a 0.01, not a 0.1, not 0.001. It's just 1. So if, for instance, the Wall Street 30 moved from 12,400 to 12,401, that'd be a 1 tick move worth $1. If it moved to 402, that'd be $2. If it moved to 403, that'd be $3. So a move from 12,400 to 12,410 would be an upwards move of 10 ticks. This move would be worth $10, which is 10 ticks times $1 per tick on one Nadex Wall Street 30 spread. And the Wall Street 30, the US Tech 100, Silver, FTSE, the Germany 30, Japan 225, all of them tick in movements of 1. And again, you don't have to even memorize this, okay? Just look at the price and see how there's no decimal places. The last place right there, the last increment, is always the tick. So that's how it'll move. You'll know that it'll always move in 1, 2, 3, 4, and every movement will always be a single digit of 1. So from 1 to 2, from 2 to 3, from 3 to 4, that's $1, and 1 tick always equals $1. Now, let's say we're looking at the US 500 or the US Small Cap 2000, gold, copper, corn, or soybeans. Okay, you don't have to memorize these. Just look at the platform and you'll see how it has 0.0 right there. So you know that if it moves from 0.0 to 0.1, that's a $1 move. To 0.2, that's a $2 move. Okay, so if it moved literally 2 ticks, that'd be a $2 move. So a move from 1300 to 1301 would be a move of 10 ticks. That move would be worth $10. 10 ticks times $1 per tick equals $10. And that's on one Nadex US 500 spread. Now the 3 yen currency pairs, US yen, Euro yen, pound yen, and oil, all tick in 0.01. Again, you see this right here on the Nadex platform. So that's 0.00. So you know that last increment, that last digit, is the tick. So, for instance, on oil, a move from 78.51 to 78.52 would be $1. So a move of 10 ticks would be $10 on one Nadex oil spread. Natural gas is the only Nadex spread that actually ticks in 0.001. And again, you can see that right here. See how there's 3 decimal places. Okay? So a move from 2.550 to 2.551 is a 1-tick move that's worth $1. If it moved 10 ticks, that'd be a $10 move on one Nadex natural gas spread. And on these currency pairs, such as Aussie dollar, Euro dollar, pound dollar, US franc, US Canadian, they all tick in 0.0001. Basically a pip. So what you see right there is, look at it again, at the Nadex platform, you'll see there's 4 decimal places. That last place, that last number right there, that's the tick value. 1.2365 to 1.2366, that's a 1-tick move. It's worth $1. Right there, it moves another tick, that's $1 more, so that's $2. So if it moved up 10 ticks, that'd be a $10 move, because that's 10 ticks times $1 per tick on one Nadex Euro USD spread. And again, all the markets mirror the underlying markets. And so as those markets move, these markets will move in accordance with that, and every tick on the Nadex spread is worth $1, no matter what market it is. And again, on underlying markets, you have to worry about, converting currencies, dealing in euros or yens or dollars. With Nadex, you don't have to worry about that. It's always $1, whether it's Euro yen, the DAX, the US 500, whatever it is. 1 tick is $1 on one spread at all times. With Nadex, you want to understand that there are trading hours for the spreads themselves that may not mirror the underlying market at all times, okay? And trading hours are when new trades can be entered into and open trades can be exited before expiration, or you can let them just expire and they'll settle. And we'll cover that in a later video. And the duration and expiration of the trading spreads, and basically how long do they last, can be as little as 2 hours and as long as 8 hours. Again, you can get in the trade anytime after it starts, and you can exit anytime before it expires or let it expire. And these happen multiple times throughout the day, which allows you to find a spread with a floor or a ceiling close to where the underlying market's price is. And then there's also daily trades, or daily spreads. And they actually expire at the end of the current trading day for that spread, and they can be as long as 22 hours and 15 minutes. And again, you can enter anytime after they start and before they expire, or you can even let them settle out if you're already in the trade. On Monday, they start as early as 3 a.m. Eastern Time, and they go as late as 4:15. Then they open again at 6 o'clock on Monday, as early as 6 o'clock, and they go as late as 4:15 the next day, every day of the week after that, on Tuesday, Wednesday, Thursday, and Friday. Also, there's a holiday schedule. They're closed on Martin Luther King Jr. Day, President's Day, Good Friday, Memorial Day, Independence Day, Labor Day, Thanksgiving Day, and Christmas Day. Some markets, such as international markets, may be closed if that international country, such as the DAX, is in Germany, has a holiday where the DAX is closed. If this is the case, they'll actually post a pop-up message when you log into the platform letting you know that that market is closed due to a holiday. Now, to find all these details that we just went over, you can hop on Nadex.com, click on Range of Markets, then click on Stock Indices. Then click on Contract Specs. Once you do that, you'll be taken to the Contract Specs page, and then scroll down to see the bull spreads. And what you'll see over here is like the Wall Street 30, how long the spread is, what hours it trades, how big the spread is, the number of contracts that are available. 3 new spread contracts will come out every hour. And then the trading hours, basically it starts 2 hours before expiration, and what the tick size is, 1. And again, the tick value is always $1. And you can go there and you can look up all the different markets, such as the indices, forex, commodities. In addition, here are the direct links to the contract specs pages for the stock indices, the spot forex, and the commodities.